gold prices now, and Indians have turned sellers from consumers, and they are selling gold as it nears its all-time high of 30,000 rupees in the physical and the futures market. Prices have been rising due to weak rupee. The scrap sales are expected to hit 300 tons in 2011. Scrap sales were 130 tons in 2011. The weak physical buying on high prices and the monsoon also is another reason that you have seen weak demand come into the markets there. Let's go across then to Prithviraj Kothari. He's MD Riddhi Siddhi Bullion and he joins us on a Mumbai phone line. Mr. Kothari, for last couple of days there have been strong reports of people actually going out and selling gold because of these high prices. What's your sense? How do you see the market?
Well, I think market is in rupee terms is still bullish. On downside should be around 28,000 to 28,500. But on still I'm watching the 32,000. Now the possibility of a Q3 is possibility is much higher for Q3. Last year the Fed meeting it's almost 28%. Now almost 50%. So if it's a Q3 announcement, then I think should be gold maybe touch $2,000. And also the Q4 they are planning.
You're saying $2,000 per ounce in this year?
Yeah, this year, yes. If it's an announcement on Q3 in the Thursday on the Fed meet, no? So if it's an announcement or something with possibility, then I think it's a $50 or $60 maybe move up. If it's a negative on Q3, then it's a $50 almost correction till the $1,570.
Mr. Kothari, with those kind of prices that we are talking about, the very volatile moves also, do you see continuous decline in the Indian consuming pattern then?
If you see the physical market side, almost a $15 discount in the gold, $15 to $20. The liquidity crisis, huge liquidity crisis in the market. If you see the gold prices, it's in the costing of the bank, it's almost 30,350 or 400. But in the domestic market, in the retails, it's only the 30,000 rupees. So almost 30,000 rupees the discounted price because the liquidity is the crisis. And a huge scrap, the exchange jewelry is coming in the market. They purchase exchange jewelry because the prices is too high. If you see the compare it to international prices, rupee depreciation may affect the prices and also the customs duty.
Mr. Kothari, if we look at the first quarter of 2012 as compared to 2011, the import or the consumption in Indian markets has been quite weak. Would you say a similar case for this quarter as well?
Yeah, maybe if you see the June and July always be the slack. Because everyone depend on the monsoon, how the monsoon is coming. So it's all depend on the monsoon. And after the August the festival is started, the exhibition also started, so fresh buying is still there. Until the December end, there is a lot of marriages there, and the new buying is still there. So each and everyone is waiting for the monsoon, how it's. But June and July, I think every year it should be slack.
All right, Mr. Kothari, we'll let you go at that. So that's the view coming in. You might see prices move as per the QE3. Let's also get in Kishore Narne. He's Senior VP Anand Rathi Commodities. Kishore, hi. How do you look at the gold prices? $2,000 or $1,500? How do you see the year ending?
I think I'll go ahead with $1,500. Probably yes, QE3 is a real possibility right now. Again, looking at the overall scenario, I think whatever the capital which has been this time will be pushed in will be going mostly into the banks rather than into the hands of the investors. So the slippage of these funds towards the speculative interest of gold will be little less this time, I feel. And I think the regulators will ensure that probably these funds are not utilized for rather than the investment purposes, and it will be typically going into the banking system where the real crisis is there.
Vijay, what's your sense between gold and silver? Which one are you picking for trade today?
Well, absolutely for today itself, I think silver seems to be relatively better off. Although, frankly, I wouldn't buy in the leverage space at this point in time because I've always been maintaining the view that gold and silver at these prices in the leverage space make for a very volatile kind of a proposition. It's only for die-hard must-trade traders every day that you could trade silver at this point in time. I would want it to go above 55,450 consistently and stay above that, and then probably hope for 300 rupees uptick from there on to book profits. But first, as I said, I would wait for a breakout and then trade.
Kishore, how about the energy space? Because while the crude prices have been declined quite sharply for May and for the June beginning as well, yesterday New York and today Asia really seems to be holding. Do you think there's some consolidation, buying opportunity coming?
I think yes, probably 82 to 87 is the range which WTI should be consolidating, but otherwise the overall trend remains weak. But again, on the supportive factors, that once the Brent comes below 100, it becomes psychologically supportive, as the Middle East countries would not prefer that Brent to be trading consistently below 100. So the push and pull factors will be obviously very aggressive at this point of time. And again, the liquidity push which we are talking about could be also the supportive. But on the fundamental side, on the demand front, it is pretty weak. So probably on the higher side, 87 or 86 and a half, I'll be selling this anything close to 4750 in India. And on the lower side, 82, 81, I'll be going to buy the crude.
Vijay, what's your sense? Why is market gaining today? Is it because of the value buying, or do you think the G7 is providing some much needed impetus to the markets to take some respite there?
Well, Manisha, technically speaking, the kind of decline that we had seen in energy complex in the last couple of trading sessions was pointing towards a minor oversold reading on the short-term charts. So a technical pullback was on the cards, and that's what you're seeing here. As far as levels are concerned, I think 84.75 on WTI grade, and you'll see profit taking or even selling, fresh selling coming and eroding gains. So as far as I'm concerned, it's a technical pullback with a possibility of say 47, 40 odd levels on the MCX. That's where I would start to seek signs of selling or even weakness before I could go out and press any fresh shots.
How about the base metal space, Kishore? Because while the LME was shut yesterday and is shut today as well, but New York and Shanghai really seems to be moving quite a lot.
I think again here on the fundamental story, it still remains pretty bearish. Probably you're looking at around 6,800, 6,700 levels on LME 3 months contract. But at the same time in India, again over the last few days, it's been too much oversold. So we need some kind of a good pullbacks to sell more. Probably 414, 417 might be on the card. So probably for the intraday, I'd be selling close to 406 kind of a levels with 414 as a stop loss. But on a positional basis, on a good pullback towards around 417, I'd be selling to target around 390, 380 levels also in India.
Vijay, what's your sense? Do you think it's a good buying opportunity, at least for the intraday market?
I feel base metals have fallen pretty sharply last week, and I would agree that they are looking mildly oversold. So I'm betting on a pullback. But since this pullback can actually terminate without any kind of advance indication, I would restrict my positions to mini contracts. Yes. I would buy the nickel June mini contract at 874 rather than go out and buy at market currently. So I would wait for a dip, buy it at 874, hold that with a stop loss at 864 levels. I would expect to book profits between 888 to 890 levels. Aluminum mini contracts, I would buy it at 108.5. I would hold that with a stop loss at 108. That's a very tight stop loss there. And I would attempt to book profits at 9.25. So I would basically restrict my positions, but going for fresh shots at this juncture doesn't seem to be the way to go forward.